Hello traders, and welcome back to another Sunday video helping to prepare you for the trading week ahead, as well as looking for trading setups that I'm personally interested in finding. Now, first of all, I just want to recap. If you're somebody who watches the channel regularly, then you know that I have been trading the Nasdaq recently, and I can officially say I am all out of my NAS trade. So I picked it up long, actually about a week ago, held it all through this this crazy up market move, which was awesome. And I trailed a stop several times behind these key structure lows. I was moving my stop loss along the way. This white line represents the final trailing stop that I was able to put on this trade before it closed out for a profit of about $5,500, which really helped on my recent drawdown. If you're, again, a regular viewer, then you know that last month was not so easy for me. Last month, here it is. This is my my brokerage statement here, the calendar that the Webull platform offers, which, by the way, if you are looking to use Webull, it's linked down below in the description. You can actually see that in the month of August, we had a little bit of a tough time finding the right setups. And, this number is pretty scary, right? Down $10,000 and just about 2% in drawdown. But I can say that this actually was much bigger at one point last month. At one point, I think we were down like $32,000 or $33,000 on the account, which is, of course, not ideal by any means. But we recovered very nicely with the help of some of these indices trades that I took last month, as well as some of the gold shorts that I was able to capture as well. So we are now, of course, in the month of September and on to hopefully a better month. We'll see, though, of course, I don't make the rules and the market does what it wants to do. So I am here to look for setups, take my trades, and do my thing. So let's move on into some trading setups for the week ahead. First of all, I know a lot of people are probably going to say, Nick, are you going to get back into the Nasdaq trade? Well, let's look at some things, and I'll give you a more clear answer here as we get started, but I'll come back to the Nasdaq. Let's talk about the dollar index. The dollar index was really strong on Friday, and to be completely honest with you, I'm not all that sure why. The jobs numbers that we got on NFP were not that impressive. We did get a slight increase in employment change on Friday, which is, of course, new jobs created. That's great, which caused the dollar to be strong, but we also saw unemployment rate tick up to 3.8%, which was a pretty substantial leap from the 3.5% reported previously. So unemployment percentage went from 3.5 to 3.8, but they created jobs. How the heck does that work? Well, if you understand fundamentals and you pay attention, it does actually make a lot of sense. Participation increased in the labor market, meaning more people were trying to get a job, but were unable to get a job and filed for unemployment, despite, yes, there were some more people who got jobs. If you think about that and take some time to understand it, that really explains why. I know a lot of people on Twitter were really confused by that. And that is the answer. Participation is the key variable there. Remember, unemployment rate is a percentage. Unemployment change is just simply a nominal value assigned to the number of jobs that were created. Anyways, dollar index did trade up regardless. And in my personal opinion, the initial move was kind of it made sense. Then the market kind of rallied back the other way. The dollar index made a push higher, which eventually the indices took a little bit of a tumble in response to that, triggering me out of my trailing stop for a profit on the Nasdaq. So that was a little bit of a recap. Now let's talk about next week. Is the dollar index a buy? Well, here is my trying to be unbiased view in terms of price action. If we take a look left, clearly we have a key level of resistance up in this area, and we can mark this area with a nice simple zone of resistance. Okay, let's mark this as our supply zone on the dollar index. Game plan for me next week is, if this dollar index is able to break through the highs, it could be very interesting. But perhaps more interesting than just my thoughts, let's take a look at what big money was doing with the dollar index. I think it could give us a little bit more of a clear answer. What I'm pulling up here is the commitment of traders data from the Edge Finder, which is my company, A1 Trading. We build software tools for traders, and this is the commitment of traders data laid out in simple layman's terms for people who are looking to learn more about fundamentals and COT stuff. This tool is ideal for my own analysis and for many traders who are using it as well. Well, let's see if we can find anything unique about the dollar. The dollar index, let's find it on this list. USD, where are you? And there it is. US dollar is in red here. Now, I can tell you without even reading the rest of the report here on the COT data that the US dollar had a net bearish move last week. What we see is that there was a decrease in longs and an increase in shorts. This was a red overall week for the dollar index. So it trading up has me very cautious personally. And we'll see this reflected, I'm sure, in the scoring of the Edge Finder. The thing is, you're going to see possibly some of these dollar indexes no longer having that strong COT bias. You can see it's now gone to zero. It's lost its kind of really strong bias there on like dollar CAD, dollar yen. So we'll watch this one. COT is not the only thing to pay attention to. However, it is a very, very important thing to take note of, because again, if big money has been kind of decreasing their longs and even increasing shorts, it's possible that we do see this thing kind of fizzle out and maybe big money has a bigger appetite to go short on this. Now, again, that does not mean I'm just looking to outright short the dollar index just because it's coming back to the highs, because this thing is still in a very strong upward trend. In fact, I think buyers support the dollar around areas like this 103 area. And of course, you can see kind of more intraday on the 1 hour chart, you'd probably see some strong support around the 103.5 area, which is this zone in green as well. So for me to even see any opportunities on the short side of the dollar index, which might lean towards buying gold, buying the euro, for me to see that, I really would need to start seeing failures at levels of support that we've just marked out. So again, cautious on the dollar and probably a little bit more neutral than I was last week on the dollar index. I was pretty bullish this past few weeks, but I'm going to just kind of stay neutral and see where this thing wants to go. Let's talk about some more setups off of the Edge Finder here today. You can see the Nasdaq has lost its bullish reading. So for me right now, I will probably hold off on buying the Nasdaq in the very short term. In fact, even some US 30 bearishness coming in, which I think is very, very interesting to say the least. In fact, let's keep going. We'll see what else we can find with all of this stuff. The dollar index is one side of the coin. Let's also take a look. I want to show you guys something in terms of smart money. We could take a closer look at some other assets on the list. So gold, a lot of traders are going to ask about gold here. Of course, in all of my videos, people are wondering about gold. It actually had a very bullish last reporting. You can see it in blue here. That blue represents that we saw both an increase in longs and a decrease in shorts. This was a huge week for gold bulls. This is actually a surprisingly bullish report out of the COT data. And we can see again, if we go over to gold, gold had a pretty strong week. And with this may actually start to turn the bias here a little bit. In terms of what institutional money is doing, they seem to be very long biased on gold. So perhaps you're looking at these areas of support and you're saying, well, there's a support from big money, right? Institutional money. These, we're talking about hedge funds and professional money managers. They're long on gold. So perhaps there is a little bit of bullish sway in that insight. So for me, again, I'm not fully convinced, bullish on gold just yet. However, a lot of things happened in the right direction with this past week. Jobs numbers overall were somewhat slow, and that of course could lean towards a softer Federal Reserve, which could very likely impact gold in a positive way, right? If the Fed starts backing off rate hikes, the gold market would do very, very well. So what I would say is if you're a gold bull, you could watch this area very well. Again, nice upward structure, nice upward momentum. This is a 4 hour chart. You could probably get down to the 1 hour chart and possibly even find some opportunities. I think you're at a level of support that clearly has been supported well by the buyers. And again, coming into this trend line to the upside, there could be some opportunities to look for gold longs. The other maybe more trend following or momentum traders setup could be something like this. A break through the highs could very well incite more upside from gold buyers, right? It's weird how that works, but typically momentum is that thing where, once we start to see structures like this looking left start to break out, buyers start to catch wind of it and they start to pick up the pieces and even look to go long on retests. So again, very popular setup and for good reason. So gold also on the Edge Finder's commitment of traders data is very, very intriguing to keep an eye on. I should also say, guys, that if you are not already using the Edge Finder and you would like to get a copy of our Commitment of Traders data report each week, it is an incredibly powerful tool that we have spent a lot of time building and perfecting for our users. And if you'd like a copy, it is currently 30% off if you use the code that is on the screen right now. If you click the link down below in the description and at checkout you use code YTVIP, that is going to knock off 30% of the price of the tool. This is in celebration of our recent features that we've just added to the Edge Finder, all of this new kind of algorithmic stuff that we've added, you know, the different calculations that the tool is doing, all the different heat maps and color codings and things like that that we've done to make this tool very, very easy to understand and track what big money is doing. If you'd like a copy of this tool to have at your disposal, please use the link down below in the description and you can get 30% off with that promo code that I just mentioned. So I also want to talk a little about gold, specifically on the Edge Finder's readings. This is the first time that we've actually started to see a positive reading on gold. It's not an incredibly bullish reading just yet, but we have started to see price change directions, and the Edge Finder is starting to pick up on possibilities that the fundamentals are also looking bullish. Again, I mentioned that COT is 67, 68% long. That's a pretty substantial long exposure on the metal, and might be worth keeping an eye on. So anyways, gold is definitely on my watch list to see if this thing starts to poke up into the more bullish categories, and we will certainly have to see how that COT data does kind of form going forward. Again, gold on a technical analysis standpoint looks pretty interesting, and we'll definitely have to keep an eye on that one. The EURUSD had a terrible week last week, completely fallen apart with that dollar strength that did come in following the jobs report. And the question is the euro interesting at all? Well, let's go look at the smart money tracker for a second. We can just look up at the euro, and it does not look good. Take a look at this, guys. The euro is in red. You already know what that means if you've been watching closely. That means a decrease in longs and an increase in shorts. That is a very bearish reading, which is why the text is in red. So this euro last week of reporting from COT data does not very much help out the bulls in any way. In fact, this looks very bearish going into this week. Again, this sell-off in the euro could very well sustain itself if we're able to kind of continue to see these breakouts. So for example, I'll bring it up to the 4-hour chart for a second. We had this level of support that clearly did not hold out as support, and in fact even turned into key resistance. If price was to retest this week at this level, I would imagine there's probably plenty of sellers who would be happy to try and pick it up on the short side, perhaps at a 50% retracement. The other side, however, is what if we don't get a retracement and we just break clean through the lows? Well, if we see that, which we started to see, by the way, towards the end of the week, right? Look at this. Look at the way the candle closed. The candle closed where wicks were formed previously. That's just showing how strong sellers were into the close last week. Now, is this enough to go ahead and say, oh, it's going to definitely tank from here? I don't think so personally. For me, price action wise, what I'd like to see is I'd like to see a decisive close underneath, some candle looking kind of like this, underneath the lows, and then perhaps on the lower time frames looking for that opportunity for short side continuation, especially with the confirmation from the COT data that I just pulled up. The euro looks really interesting to me right now. So keep an eye on the euro. Another one is, of course, the pound USD, and I'd actually like to just double check the COT data as well on this one. Let's go look at COT, also very bearish. Again, this red text, remember, here's your quiz. What does that mean? A decrease in longs and an increase in shorts. That's what we saw this past week on the euro and on the pound. Really, really kind of interesting. So maybe, also we did see it on the USD. So perhaps the best setups may not even be against the dollar. Perhaps it's against something like the Japanese yen, or maybe even, let's see, we have, we don't actually have any currencies that are straight up in the blue this past week, which is actually really interesting. We see a lot of metals, both silver and gold had increased. US 30 did have a more positive week this past week, which is interesting. And SPX is flat, NAS flat as well, or not really flat, just kind of a mixed report. But again, the red or blue text gives you an idea that it is a more strongly oriented report. Again, remember, if you'd like a copy of this tool sent directly to you, it's a browser-based tool. You can see I'm just in Chrome. You can basically pull this up on your phone or on any computer as long as you're signed into your email, and that is how easy it is to access all of this data. So if you'd like a copy, remember, that link is down below in the description, and our sale is ending soon. I know I keep pointing that out, but the point is, we do these sale events every once in a while, and after they end, we don't do them for a while after that, and people are asking for us, hey, can I get that sale? And we say no. So if you'd like your copy for a super discounted rate, that 30% off is available in the description down below. So what I was pointing out with the pound, similar concept with the euro. Take a look at the daily chart. It's been really, really pressed to the downside. You could see several instances where, again, basically on the longer term basis, sellers have stayed in control of this. And if we're able to break through the lows, it's possible that sellers kind of keep control and perhaps even continue the downward pressure on this. Support is at 1.2585, and if this level goes, it's possible that we see, again, a leg lower on this downward trend. It's very, very possible, given everything that we're seeing from the COT data. The pound is not very well supported there. However, perhaps the trade is more against something like the pound Japanese yen, right? The pound yen, the yen did not have nearly as bearish of a week as the US dollar, right? The Japanese yen saw a decrease in longs, but also a decrease in shorts. So kind of a mixed sentiment. How can that happen? Well, basically the idea is just less exposure on a net by net basis, right? They're just decreasing contracts in both the long and short side of the futures market. So anyways, GJ, if you're watching this for breakouts, possibly, get down to the 1 hour chart and look at this and say, well, there's support here around 183.8, but if this level breaks, momentum on these sorts of pairs, the yen crosses, can be really, really devastating even in short bursts. I mean, this move right here, right? This move by itself, 106 pips. So, catching just one of those legs can be really crazy in terms of pip movement that is generated from that. Now, I did say I would come back to the Nasdaq. Let's take a look at it. So again, let's go back to actually, let's go back to my trade initially. So this was the trade that I took last week, and I did take this inside of our Discord. So here's a look at what was shared with members. So inside of the Discord, we share pretty much all the trades we're taking, but more importantly, we share why we are taking trades, as well as what is impacting the market's move. So I mentioned, on Friday, that unemployment rate ticked up to 3.8%, which will likely get the Federal Reserve's attention and may cause them to be less hawkish. So that was one of the big reasons we had such a nice pop on Friday. Again, I did trail that stop loss, and we ended up closing not quite the 6,000 that we were floating, but about $5,500 in profit on that single trade. So it was a really, really good week, and most of my week was spent just kind of in and out trading and moving with the Nasdaq, which was awesome. So if you'd like to get trade alerts from us, this will also be linked down below in the description, and you can actually get both the Edge Finder and the Discord for a discount currently. All the details will be down below. You can also see Frank's trades. Frank and I have been trading together for quite a long time, and if you'd like to see what we are trading and why we are trading it, feel free to again join us in the Discord. So goal with Nasdaq here, the question is, am I going to be a buyer again? And the answer is probably, but probably not until we get a setup that looks reasonable. Maybe a pullback here could be interesting. Maybe this like 38.2% lines up nicely. Maybe there's something there off of the 4 hour chart. But again, I'd have to go double check to see what the Edge Finder is saying at the time to make sure that I'm getting kind of that confirmation from the fundamentals and the COT data. Again, NASDAQ was kind of flat. If anything, the US 30 had a rebound in terms of COT data. So perhaps there's something there. You can see US 30 had a blue text here. That means an increase in longs and a decrease in shorts. That's a very net bullish week for the Dow. So very interesting. US 30 might be on the watch list going into next week. And if I take those trades, members, you guys will see it inside of the trade room. So we'll keep an eye on that. Let's take a quick look at retail sentiment. Where's retail positioned going into this week? Well, Generally speaking, what we see is we have the Australian dollar, the Kiwi, the dollar Swiss long, and the USD JPY, USD CAD, pound USD on the short side. So again, we take these as kind of contrarian indicators. So please be very careful. You know, if you see retail traders very heavily bought or very short, it can be a red flag. Remember, guys, join us inside of the Discord or get your copy of the Edge Finder at a super discounted rate before the sale ends. And I hope you have a wonderful week ahead. Thanks for coming in.